analyze what the D Street verdict has been for the budget, although the equity markets, after that knee-jerk reaction post the capital tax changes that were announced in the budget, did see a recovery, and we managed to recover all of our losses across the board. But let's try and understand the fine print. How are the markets likely to absorb, all that was announced in the budget today? Hiren Ved from Alchemy Capital joins us on the show right now, and we also have with us Prashant Khemka from White Oak Capital Management joining in. Gentlemen, hi, evening. Prashant, if I could start off with you, while the fiscal discipline has been maintained, there's been the right focus on capex and employment, on MSMEs. But again, for equity markets, there's been the capital gains tax tampering as well. How is it that you would describe the budget?
No, thank you. Thank you. I think in all other respects, if you put aside the capital gains tax for a minute, in all other respects, it is very much continuity of the last several budgets and the policies therein. Obviously, with some puts and takes, there's a bit more focus, bit more emphasis on employment, on rural, areas where there's been some stress over the last few years. Fiscal consolidation continues on the path that has been laid out in the past, over the past several years during the budget speeches. But obviously, what's uh, rightfully preoccupied, I think, people in our industry, in the investment industry, is this capital gains tax. There are two aspects to it. One is the tax itself, which is a 2.5% plus surcharge and all increase in long term and a 5% increase in short term, plus on top the surcharges. But the other is the predictability of these taxes going forward. For last several years, worth noting that for last several years these taxes were stable. Not a very long time period in India's context, in a global context, but in India's context, they were stable for uh, quite a few years. Uh, Now, 12.5% doesn't quite sound like a stable long term. By design, has been designed to be stable long term. Is it going to be increased further in time periods when markets make good gains? Uh, and the short-term capital gains tax, would that be revised? Whether that uncertainty, it does, you know, uh, creep in investor minds and globally as well, more so than maybe in domestic investors' minds, in my view. So from that perspective, the unpredictability, I think, is even more concerning than the increase itself. There are expectations that the long-term capital gains tax might be increased to bring them in line with short-term capital gains tax, but with indexation benefit. I think indexation benefits we have not seen. In case of real estate, they have been actually removed. So going forward, to expect indexation benefits to come in for equities becomes um, less likely, and so it's just a bit greater uncertainty going forward, I would say, on tax front, in addition to the higher taxes. So this one aspect is, I would say, from an equity markets perspective, negative. Otherwise, the budget is in line with past several budgets, which have been very well received, and rightly so, by the equity markets.
Hiren, hi, evening. Are you also feeling as unsettled that this may not be it, and this could perhaps lead to more upping of taxes in the times to come?
Well, I hope not. I want to be optimistic on that count that hopefully this, for whatever reason, was well thought out, and from here on there will be stability in tax rates. And this is not something that I'm saying. I think the government itself had on several occasions have mentioned that you need stability in tax rates over the long term. So I still, my feeling is that, they had to rationalize taxes on capital gains across assets, and hopefully they've done that. Uh, I think if you take STP and cap gains and cess on that, we are already paying reasonable amount of tax, and it's not as if that the government was in need of revenue as such, right? But I think that what seems to have played onto the minds of the government is probably the concern that RBI and the regulator believe that a lot of the financial household savings are uh, going away from bank deposits to the equity markets, which I think, unless there are excesses, it's a great trend to have because Indian entrepreneurs need risk capital, and the capital markets are a great medium for Indian entrepreneurs to access that capital. So, I mean, to cut it short, my view is that I hope this is probably, uh, uh, you know, uh, from here on is a stable tax rate. Uh, if that is the case, then I think, markets in the past have also adjusted to new realities.
Are there any clear, a set of winners which you can identify after looking at the directional bent of the budget? For example, green energy, clean water, a lot of new focus areas have come up.
So I think, Nikunj, uh, if you look at the rest of the budget, I think that broadly they've continued with uh, the focus on infrastructure, so power, but there are a lot of smaller emphasis that have been made. So, for example, wanting to bring in small nuclear power plants in the overall renewable mix, right? I mean, that's clearly something that they have articulated in this budget. The fact that we want to set up industrial parks in several cities to enable manufacturing to take a quantum leap. But otherwise, if you look at the broad numbers, I think they've kept capex at the number of 11 lakh crores, though I do believe, and we still have to look at the fine print. But my sense is that we should not take capex only at 11 lakh crores. If you add 15,000 crores that has been given to Andhra, plus another 26,000 crores that has been allocated to Bihar, which are also in turn for infrastructure projects. There is a ultra mega power plant in AP. There is irrigation facilities to be set up in AP, and there is allocation for roads for Bihar, and therefore, in many senses, while it may seem that, oh, this is for two states, but if you add 15 and 26, that's another capex allocation, right, that has happened.
Prashant, let's look at the other side of the equation, which is that suddenly the bond market looks better. Macro, fiscal deficit, inflation. Equity valuations are not cheap, but bond market is looking attractive. Could we see a tactical shift in asset allocation? And when these shifts they happen at a distributor level, at a retail level, thanks to social media, investors like you, when you come on the channel, when you talk about trends, could we look at a big change happening there?
These changes are only evident in hindsight, Nikunj, in my view. And if for such a change to happen, especially with what the investors' experience has been over the last 2, 3 years, I think for investor behavior to change, it would require necessary condition would be poor returns from equity markets, in my view, or substantially inferior returns from the compared to the bond markets. Absent that, I don't think the flows or investor behavior would change or would precede the returns, I would say it would be the other way around.
Hiren, in the most crowded trade right now, which is PSU, which in a sense was fueled by optimism, bit of a participation, and the sheer excitement of what's next. Do you think now this budget, in a sense, could have impact? Because today defense stocks are down, railways does not get any allocation. Do you think that from a market standpoint, one now needs to get worried about the frothiness in some of the PSU stocks, especially defense railways?
So I think, Nikunj, wherever there was over optimism and overvaluation, those usually tend to get corrected over a period of time. But if you ask me, on the whole, uh, the numbers haven't changed. So that should not change the basic hypothesis for any of that trend. And if you recall what the finance minister said, they said that we are committed to supporting fiscally infrastructure for the next 5 years.
Prashant, Hiren Ved, really appreciate your time. Thank you very much for joining us. Well, it was not
Thank you.
it was a volatile day, but not a very scary day. It was a noisy Tuesday, but on a day when we had a large event risk, looks like so far markets have come on the right side of the trade. Thank you for tuning in and thank you for watching the show.
Thank you.